The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the Thursday edition, Thursday the 20th. Why is Thursday the 20th so important? Well, for me it is because, whoops, let me put this over here. You can see what it is. And what we're going to be doing today is having, at 6:30 Eastern Time, and I'm really looking forward to this, just been preparing like crazy. We will be having, and let me just get rid of the sound on this particular instrument right here. 1 second, just drag it down. There it is. I will be having a free webinar for my subscribers. This is going to be on the MACD and the slow stochastic. It's going to be very detailed. It's going to be, you'll be able to archive it for 30 days. You're going to be able to look at it in such a way that you can constantly refer to it because you're going to get in not just 2 weeks, the usual free trial period. You're going to be getting a month of my newsletter, the opening call. We have had some very nice trades. And what's really important about this is that you're going to be able to reference from the webinar itself the charts that you are following and why. And I will explain every day why we're doing this. I try as much as possible to show the charts every single day of what we are wanting to buy, why we're looking at it, as well as many of the charts that are just basically very important to be looking at. So please, there's time to go to the front page of TFNN, sign up. It's going to cost you nothing. It's a free trial for a month, and you get and only subscribers can come to this webinar. So it'll be for you. You'll be able to come to it tonight, and if you can't come to it tonight, once you've signed up, it's archived, so you can go to it in your own convenience. Maybe this weekend when you have a chance. So it's my recommendation. It's a win-win situation because it's knowledge. It's the way I like to apply the MACD, the technical veracity of the MACD and the slow stochastic to the charts, and how we can work with them and how you can use them to your best advantage. And I'm really looking forward to it. So in that regard, let me just show you something here. You see in this particular instance, the E-minis are trading up 450. And what happened with what's her name, Janet Yellen yesterday? Market pullback, got a little nervous there. Now, I love to say, everyone talks about the market hates uncertainty. I don't know how many decades I've been saying, what? Every day the market lives with uncertainty. No. The market hates uncertainty about uncertainty. In other words, as soon as you step one parameter away, one oscillation away, then the market's saying, nah, we were living with that kind of uncertainty. We got used to it. Now we've got another uncertainty, and that's the issue. So, and that's regardless of what's going on now, because what's going on now is that the markets generally have given a number of sell signals to sell mode in the daily charts. Weekly charts, I have to wait until Friday. Tomorrow at 4 o'clock, I'll have a lot more information. That's number one. Number two is you can see in this particular instance the daily chart here on the left. That's the daily chart, and it shows that the E-minis were able to spike above the downtrend line. So far today, it's up again above the downtrend line and above the 9-period moving average. But the MACD is not very good because that green line, which it's the MACD line. I call it the fast-moving average because it's the quicker of the two moving averages. And the slow stochastic, which is at 53%, are not showing follow-through strength. And that's really important. And in the 120-minute chart, we had a beautiful arch formation, retested exactly left side, right side low in the 1825 area, went to 1823.50, had a fabulous rally to a peak D yesterday before Yellen made whatever she said, made the market nervous. Then at 1867.50, it turned down from D. Some of the others didn't get to D. Dow was very important, and it plunged down to the low yesterday from 867, went down to 842. I would have to say that a 23-point decline, 25-point decline is pretty big. And then it bounced today to a leg B, and now we're going to see what happens. MACD is trying to turn around. The histogram, I'm going to talk about this histogram here with the green line above and the red lines below, the vertical lines, and that is improving. It's matching much the stochastic. We'll see. The day is young. To me, this is just a bounce, and that's all I'm looking at it for now. Let me just show you something else. I'll talk a little bit about this if we have time tonight. See, here's the 5-minute chart. It doesn't matter what time frame. The Chapman wave and the parameters of the MACD stochastic work the same way. Look at that huge move when it went to a peak F top in the E-mini at quarter to 11 this morning, Eastern time at 860.25. Look at that MACD turned down. The RSI, the relative strengths were turning down both time frames, the 14 and the 5. And you got the MACD made this huge turnaround called the Lamar track, where you take that huge turn to the right. They usually go to the right. And it broke underneath. It crossed negative, and you can't see it here. It's been covered, but the MACD's histogram is has turned negative, and look at the stochastic back under 80%. So this is a 5-minute chart, same thing. So let's run the numbers, and then I'm going to go through some things that I think are quite special. The Dow's up 38 to 16,259. The S&P is up 3 at 1863. The comp index is up 5 at 4312. Now gold, let me just show you this. The gold chart, I've been discussing, it's now exactly a week that I've been discussing this, that gold was making a top. I thought it would be a top in the daily chart that had the potential to go back as a pattern. I don't know if I'll even have too much time to talk about it tonight, but it's Chap Wave stalk leg formation. Price goes up in a very strong leg made up of other legs, but it's a strong move to the upside. Stops, makes the oval pattern, then breaks out. That's the body. It's a leg, body, goes to the neck. The neck is right here. Makes the head and immediately turns down and should test. I said 1355 was key. That was the first downside target. It went right through that, and it went to a low today of 1321. 1321 is just above the 1319.90 body. Now, this particular move in the stalk leg formation, the pattern I always look for is that if you go into the body and don't break above it very quickly within 2 bars of breaking down, then you've got to watch the low bar, because if you take out the low bar, you'll probably go lower. That's in this case gold. And the gold, if it goes lower, would go to the 1310 to the 1298 area. 1303 is the 32 is the 50 period exponential moving average right there, right there. And that's the kind of area that I'd anticipate if we take out 1319.90. You don't even have to close under it. You just have to take it out. So that's gold. And I thought that was quite interesting. Not only that, look at this engulfing candle on the weekly chart in leg B. And we're about to test the 13, what coin's being covered. So I think it's somewhere around 1316 level of the 9-period exponential moving average support. But the MACD is still at 88%. Sorry, the MACD is still very strong, and the slow stochastic is still at 88%. And I will discuss that tonight. I will discuss our positions, why we have those positions, why we've added to some of the positions, both on the short side, but it's also on the long side in the sense that we're buying 200% short position or 300% short positions. You go long, but the makeup of it's a beautiful ETF or an ETN structure, because at the home office, doesn't matter who it is, direction shares or whatever, they do all the work. They do the shorting, and then you can go long in your IRA or whatever account it is if you don't want to short, and you can buy it on the long side, but in fact you're waiting for it to go down. So that's going to be very important there. And one of our long stocks is up 1.62% today alone. Yesterday was up as well. So I think this is a very selective market. I think it's a rotational correction that we're undergoing right now. There are certain sectors like in the IBB, the NASDAQ biotechs that are just really, some of them are getting hammered and some are holding up quite well, but the IBB itself is pulling back. And most importantly, there are a couple of sectors that are showing some strength, a rotational strength, and the stocks that were very strong going into last week, the gold stocks, are now much, much weaker. So with that said, I just wanted to continue. High-grade copper is now under 3. It's at 2.96. Man, I tell you, that copper, I think it's telling us something about many things. And Pat called from Denison, Massachusetts yesterday discussing that it was part of a bond position, a trade-off. And, it might be, but the actual chart of the gold contract is just telling me that high-grade copper is telling me that high-grade copper has been under pressure regardless of all these other exogenous events. And the daily chart, that very strong hammer candle yesterday, the daily chart is almost negating that because it got repelled from the 9-period moving average. So I'm going to be watching this really closely. You got bonds up 7/30 seconds at 132.06. I still think that bonds, the Fed has said we want to keep it in a range. I think you can short-term trade this, but nothing more. I just think it's stuck in a range. And the dollar, look at this. Gold went plummeting. Dollar went really high. Wait a minute. Why have I lost all my notations? I hate this. I don't know what's going on. Oh, there it is. Okay. Whew. Gave me a startle there. So that was that yesterday's move and today's follow through. Very strong. But what I said yesterday on the show is closing above in the continuous contract, which is just a few cents. Look, right now the continuous contract's at 80.23, and the contract itself, the June, is 80.40. So we're talking about 17 cents. It's really close. I said that the high of the 5th of March at 80.27 in the continuous contract, if the dollar closes above it, the next target would be 80.58. And if it showed that kind of strength, because the gold is still weakening, then you can see 80.73, the 200-period moving average being hit. I still think this is bouncing within a trading range at this particular point, but I'm watching it closely because gold tested successfully so far very strong monthly support, which goes all the way down to the 78.60 level, not far away from here on a monthly basis. That allows it to bounce a little bit further to the upside. So I'm watching dollar very closely. Very good action right now. Now, in the den, Cub says GE low of the day. GE led the way up. GE is leading the way down. GE is telling me that if it was to break, I'll talk about this uptrend, this up channel support line. Very important line. If GE on Friday closes below 24.90, it's at 25.15 right now. Not a good sign. I'll be back. Basil Chapman, 877-927-6648. Today's the webinar night. I'd love to hear from you. Check it on the front page of TFNN.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So I was mentioning that GE was looking very poor, but that major up-channel support line, if it starts to break down, goes into the mid-24s by next week, that is really not a good sign at all. I mean, that is not a good sign, especially for GE. And I said, just had a quick pop-up in my email for a question. Hi, Basil. Just signed up for your newsletter free trial. Looking forward to the webinar. Sears, SHLD, has been on the move again. Your thoughts? Might it fill their daily gap at 55.50? Thanks. And what's his name? So this is very interesting because about a year and a half, maybe 2 years ago, I happened to be talking to someone who absolutely knows. He knows all the guys. I sometimes mention him. He's a biotech specialist, and he went to business school with, you name the name, whether it's whoever runs Macy's, whoever runs whatever it is. He just knows them all. And he's had business dealings with them, and or worked for them at some point. And I said something about Sears. I said, that Sears is just, I see J.C. Penney working really hard at trying to turn things around. I go into Sears, and I just don't know how they stay in business. He said, no, you got the wrong end. He said, Eddie Lambert, I think, what's his name? He said, that guy, it's a closed thing. They have so few shares out that they can organize exactly what they want, and it'll go up when you least expect it. I know that for sure. And it goes down absolutely very suddenly, when you think it's going down, it's time to short, that's when it suddenly pops back up again. Well, Sears Holdings is SHLD, trading at 48.45, up 15 cents. Where is it? You won't believe it. It has gone from the low that made on most recent low, 32.85 in the daily chart, rebounding right to the previous high of 49.98. The high today is 49.72 in leg E with a long-legged doji. It's telling me a huge story. Maybe I'll talk about it tonight. Well, I don't think it's a share that anyone, I don't want to tell anybody to short it because it's right now ready to come down. But you know what? The way it acts and reacts, it's just not the regular stock that you look at. I've found that it's, for me to say that it's a difficult stock to trade, says that you're talking to someone who's watched this very closely for a long time. And it just does weird things. And you can see it. Look at the monthly chart. Stuck in a trading range, but a pretty big trading range from the 24.30 area to the high of 81, and then it gets narrower and narrower, but it's still a wide range between 67.50 in November of last year and the most recent low last month of the 32 area, 32.85. So all I'm going to say is I think that Sears is getting ready for a pretty sharp pullback on percentage basis, 10%, maybe even 12%. But I'm not getting any signals right now. I think I'm close to one. The 120-minute chart. Look how amazing this is. Look, from the low, most recent low of 32.85 on the 5th of February, it went peak ABC, pulls back, and then goes DE and a powerful leg F all the way to 44.01. That's just in a matter of from the 8th of Feb to the 13th, is it? I think it's the 13th. Yeah, the 13th of February. Then it pulls back way to the 200-period moving average. Exactly. It goes trough A, trough B, C, trough D, trough E. Plop. Doji candle, and it turns around. Stochastic MACD turn around. It goes peak A, B, C, D, goes to an E, and an E at 48.09 on the 4th of March, pulls back again. Pulls back, and this is, I don't know if I'll have time tonight to talk about it, but this is one of the most difficult. Thank you, P.K. D and the Dan. Yeah, Eddie Lampert and Bruce Berkowitz are the two heaviest owners, and I mean, there's not much you can do about that. So look here, that's a very difficult buy signal to get. Yes, you can identify the cup formation, but you don't really know it's going to go to a D. It does go all the way to ABCD, makes a D top just a little higher at 48.68 than the previous high of 48.09. D, and it pulls back, and now it's making the W pattern. The W pattern at the top, the soft W pattern, like the inversion of the lowercase m pattern at the bottom, is where it's the most vulnerable. That resistance that it's going to take it between 49.72 and maybe just a tad higher, just into the 50.50 area maybe. This is going to be tough because this is where you can expect a sudden pullback again. So I'm watching this and I'm saying, yeah, I can see a pullback. I don't know if I'm going to recommend it as a short. It's just, I find it just way too difficult. It doesn't do my normal things because sometimes instead of pulling back, it pulls back just a little bit and then out of the blue it'll have this sudden spike to the upside. So I'm leaving it alone. That's all I'm going to be able to tell you. We'll come back with Jerry and Jennifer straight after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Basil Chapman, Tiger Ignitions Hour, and we're going straight to Jerry in the Back Bay. Hey, Jerry, how are you?
Good. How are you?
Very well, thank you.
I'm the guy from the MIT group. Remember?
Yeah, Jerry, and you're going to be looking at today what?
Well, I'll tell you what I'm interested in is Visa and Goldman Sachs, because I'm sort of agreeing with you that the Dow may have more of a break, and those are the two largest weightings in the Dow. I mean, Visa at 220 is like 8 times the weight of GE, and
correct.
I'm curious what you think about the technical situation of those two stocks. Just
well,
quick and dirty.
It's very interesting that you bring them up, because both in a way are financials. They're not banks per se, but they're financials. And
Right.
the XLF is doing very well today. The XLF is up 0.93%, nice strong leg. And the Bank of America is at a new recovery high leg. I'm calling it leg C in the daily at 1773. That's why I'm calling this a rotational correction. And the weekly is a leg E, and the monthly I've got a G/C, and it hasn't even come back to test. It hasn't broken the 9-period moving average in the monthly chart. I must use this tonight as a very good example of these techniques. So let me just write this down if you don't mind. Where's my book? Where's my book? Quickly, book. Oh, there it is. So we want to look at BAC monthly example. Great, thank you. Now, since you're from the Back Bay area, I'm going to tell you about something before we go anywhere else. Going on right now through March the 29th in Gallery Naga. I don't know how to pronounce it. Naga, Naga, on 67 Newbury Street.
Newbury, down the street, yeah.
Yeah, I know where it is. I just never remember how to pronounce it. They've got an exhibition of someone I know very well. I haven't seen him for a long time. Peter Van der Varka. He used to always do the pictures in the Boston Globe, the architectural pictures. Campbell used to do the commentary, and Peter used to do the, I don't know if he still does it, all the pictures. Well, there's an exhibition going on right now on the central artery, black and white photographs as well as color photographs of trees, architecture, and the edges of land meeting. He's a fabulous photographer, absolutely a fantastic photographer. He's got pictures at the, if anyone's been to the Harvard Club down on Commonwealth Avenue by Mass Ave, there's a whole floor, and they've got along the corridor. They've got his pictures. So
I appreciate that. I think I'll stop over there.
Because I love to talk about things that are good as well as things that are bad around here. Tomorrow I'll talk, if I have a chance, I'll talk about the restaurants, Newton becoming the restaurant capital of the Massachusetts. I can't believe it. Anyway,
sure.
So now let's go back to the charts. What I wanted to say is that Goldman Sachs is lagging. Now, there was a period where Goldman Sachs, not only could they do no wrong, but they could do no wrong every single day of the year, just about. It was unbelievable. There's been a complete change, a mentality change there. So you don't hear very much.
They've been emasculated by the
lawsuits and all sorts of things. Yes.
No, the financial law, the new financial law.
Yeah, that's what I'm saying.
Proprietary trading, proprietary trading.
Right. Everything that came about affects them.
And they're not a bank. They don't benefit from some of the changes in rates,
So they are just getting squeezed. So I'm putting them in another category altogether, and I'm calling them probably one of the laggards in the XLF. But most importantly, if you combine the chart that I'm looking at with the peak F-top in the Chapman Wave Daily, we're still way under the previous high. So this could be an alternative. This could actually be a G/C in the weekly. So let's call it a G/C. I could quite easily call it a G, but there's just enough residual strength that I'd like to wait a little bit longer before I completely... Yeah. And in the monthly, you've gone to a peak E already, and the MACD is holding but starting to flatten out, and the stochastic starting to pull back quite sharply. On balance, volume isn't keeping pace with it. Most importantly, you've got the 9-period moving average that it's sat on, and if it breaks 163 on any close in the next month or two, that's going to change very drastically the actual 9-period moving average support turn to resistance. So I don't like GS, Goldman Sachs. I would not be trading it on the long side. I'm probably going to say that I'm not even sure I'm going to trade it on the short side. I think it's just stuck. But my guess is it's going to make lower highs and lower lows. So if you do trade it, I don't think it's going to be one of those. Well, I shouldn't say that. The chart says, it could have quick 5 to 6 point declines at any stage. So, I'd say that I'd be looking at more the short side than the long side. I don't have a signal just yet, but I'm real close to one that says now's the time that you might want to think of shorting Goldman Sachs. And now you've got Visa. Visa, let me put the V in the right place to get Visa.
That's been a monster, yeah.
It's been an unbelievable stock, but now the monthly chart is saying for the first time, the candle that's forming in March is the first candle of uncertainty, or let's just say a stalling of the upward momentum. And the weekly chart has the pattern that I love. It's the H pattern, the lowercase h pattern that says these are the things to watch, because a break This is a very simple one. If Visa trading at 222, by next Wednesday or Thursday, if it's able to climb into the 231 area, which should be nothing for it. It never used to be a problem. The high was 234.37. If it does that, I say, be careful, it's going to retest the highs. I can just tell you this, if it takes out last week's low of 218.56, that's going to be the dreaded H, and I have a target for it then of 211.38. So I think that Visa is stalling badly here. It's not participating and can't hold rallies. So I think you've just nailed exactly the two of the weakest stocks in that financial sector.
Yeah, and that would affect the Dow because they're the two heaviest weightings in the Dow.
Exactly, because the Dow is a price-weighted index. Yes,
right.
You're absolutely right.
All righty. Thank you very much.
Good point, and go see Peter's exhibition. I think you're going to love it. His work's fabulous.
I will do that, believe it or not. I will.
Good,
it's
thank you.
About 10-minute walk from me. Take care.
Ah, that's wonderful. Yeah, I used to live down in the Back Bay. I love the Back Bay. Thank you, Jerry. Thanks for calling, and good point on the Goldman Sachs and Visa charts. Jennifer in Wellesley. Hi, Jennifer.
Hi, thanks for taking my call, Basil.
My pleasure. I wanted to tell you, the Back Bay is having this this exhibition. Anyway, you heard the whole story.
The first nice day, I'll be walking down Newbury Street and taking a look.
Well, if you're there, I would recommend it because he's a wonderful, wonderful photographer. You'd like to look at?
Tiffany. They're reporting tomorrow, and I'm actually holding the stock, and it's down today, and I wondered if you take a look at the chart. I'm a little nervous about it.
Okay, let me do two things. Number one is, it's been a long time since I've traded purposefully, actually bought a stock just before earnings or shorted a stock just before earnings because I thought that I knew what was going to happen after earnings. I found that the risk to reward of doing that is so stupid. It's not even a number. It is just stupid unless you really have unless you're able to get the stock the day before and because it moves in your favor, when the news comes out, if it goes against you, you've got a good percentage leeway there, so it's not as bad a loss that you'll take. So because of the loss aspect, not the gaining, it's the loss, I'm avoiding it. Now, you're in a completely different situation. If you bought the stock much, much lower down, there are two things that I would recommend that you do. You don't really have to jump in and do it. I'm just saying this. You asked my opinion, and my opinion is that Tiffany right now is trading at 91.30, down $1.49. It's made that H pattern, and it's gone to a lower low. Now, I've seen enough stocks over the last 6 weeks in this very unusual market environment where they looked horrible. And then they came out with earnings, and they were up between 8%, some were even up 15. I saw one recently that was up, I can't remember, I think it was in the 20% area after news. And I thought to myself, wow, I wouldn't have expected it based on the actual chart pattern. So I don't want to say to you, you've been in this position a long time. It's a long-term kind of a buy and hold. I don't really want to interfere with your thinking, but here's my thought in terms of money management. I've got it, Tiffany, in the monthly chart, having broken out of what I call a Chapman wave cup and ladle pattern, and it's gone to a leg F. It might have recycled. This could turn out to be a C because the MACD is good, not as good as it was when into the G-top back in 2011, up at 84.49, but now it's even higher with an all-time high so far of 94.88. It's only 3.5 points off that all-time high. For money management reasons, and I'm only saying this because from the tone of your voice, from the fact that it's got the earnings out, and I think there's a little bit of concern on your part that if it misses, you could give back a lot of the gains. I'm going to recommend, I don't want to tell you the proportion, I don't know how much you've got, I don't know how long you've had it for, but if you have a very nice gain, money management says to me, keep your core position. I would take something off right now.
Yeah.
And the only reason why I'm saying that is at 91.37, if Tiffany, in this environment, if Tiffany comes out and it's kind of a relief situation and overnight there's this flurry of activity to the upside and the asking prices above 94.88, say in the 95 area. That could hold, if the market doesn't tank later on today or early tomorrow morning, that could say that it could push to 95, 96, 97, and you're in the stock, and that's wonderful. And it means that even if you've taken something off at 91, 93, you've got yourself a 4 to 5 point bonus. You know what I'm saying? Which more than makes up for the little bit that you've taken off as a precautionary situation, and to reward yourself for holding it all the time through. So that's the only thing that I would do. I tell you why. Because if Tiffany comes in with bad news, and I don't know if they're going to. I mean, there's this report in the Globe today on the eateries in the Newton area, and they talk about the wealth effect, and we've got, I couldn't believe it, I can't remember the number, maybe I'll get it in the next break, like 180, I can't remember how many restaurants in Newton, it's more than doubled. And it seems to me that the wealthy really are buying. That's why Tiffany made an all-time high. That's why I don't want to say to you, take half off, leave half on. I don't want to make a big statement like that. I'd rather say to you, if it gaps down for some reason, it could gap down as much as 4 to 6 points if it's really disappointing. So that means I would rather have you take off something to reward yourself. I don't want to tell you the proportion. That's something you're going to have to figure out. Mm-hmm. But if it gaps up and you've taken something off, it doesn't matter. It's great. So now you know that on the next big pullback in Tiffany, you might want to add that back. And that's all. It's just money management. I have nothing here that says anything other than short-term. I think if it wasn't for the earnings, I say short-term, I have a pullback coming in Tiffany. If at any point it closes under 89, then I think it's going to go towards the 88 to the 87 area. Not a big deal, 3 to 4 points. When it's had a spectacular move, if you're a long-term buy and holder, but at the same time, you've held it this long, you do want to keep a core, but I'd be taking a little bit off. Just, I don't know how much. You're going to have to figure that one out. If it was me and I had, say, maybe 100 shares, I would take off 25, 30. You got your core position. I definitely take something off to I want to be there if it gaps up, but I don't want to be fully invested if it gaps down. Simple.
Right. Okay, thank you so much.
So think it through, make a decision. Let me know next week what you decide. I'll be very interested, okay?
Right, thank you.
Thank you very much. And we're watching Tiffany closely, folks, because I do, on a shorter-term basis, I put a down arrow at peak D. I've got it in a down mode in the daily. I haven't even got a sell signal yet. I might tomorrow at Friday at 4 o'clock in the weekly. So let's just go straight to Kim in Denver. Kim, how are you?
I'm fine, Basil. How are you doing?
I'm doing very well, thank you. You'd like to
Have you looked at FXP?
I've looked at FXP many times.
And what leg is it on? Is there any more upside to this stock?
Okay, so FXP, but now I used to have it notated. I just have to do it again very quickly. In fact, I even remember notating it the other day. But I had a shutdown. Was it yesterday? Out of the blue. Just I don't know what I did, but my computer shut down. I must have hit something, and therefore I lost some of my charts. That was my fault, not TradeStation's fault. So I'm just quickly updating. I'll get A, B, C, D. Now I'm prepared to talk about it. So, folks, what we have here is the ProShares Ultra Short FTSE China 25. But if you don't mind, what I've done is the most work on the actual roots, the core, the FXI, iShares, FTSE China 25. Is that what you use for the long side, as a root, and you do the opposite? Is that it?
Yeah, I have a small position of FXP.
Okay, so hold on. We're coming to a break. I'm going to do some work on the FXI, because you have the inversion. You have the 200% short. I'll be right back with Kim in Denver.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. So the FXI that I'm looking at, which is the iShares of the China Large Cap ETF, made a low today, and it's made a 6-month low because, even more than that. The last time it was at this level was when it gapped up, the very day that it gapped up. That was the 11th of July, 2013, and the gap low is 32.65. The low today is 32.58. It's amazing how these things work. So what I'm looking at here, this is an area where there should be a little bit of support for the FXI, That's the China. That's your root position. And that says, yep, there could be a bounce to maybe even 33.51. Then I think another H pattern forms. My suspicion is that it will try to test the 31.35 low of the 25th of June. But here's the thing that I'm a little concerned with. China, everyone's beating on China, this copper, etc. I would not be surprised if China's getting real close. Certainly the 30.63 level is the 200-period moving average in the monthly chart, that China's getting real close to at least a bounce. That would surprise everyone. So if you are in the FXP, if you're long, you're looking good, but this is leg D. Now, the MACD's at 82, the MACD's strong and the stochastic's at 82%. And that says to me that, and it's in leg C in the weekly. Now, the root position is what I have to stick with, but in this particular chart, the weekly chart is so strong, I would not be surprised to see
so the D-lex is the monthly?
And no, it's only A in the monthly. Horrible chart in the monthly, but we'll see what happens.
A in the monthly.
A in the monthly.
Okay. So
okay.
That's like China Mobile came out in this earning today. Now that affect the FXP, right?
That it would, yes. So the FXP is the ProShares ultra short FTSE China 25. No, it should, and it gapped up, but it's in leg D. Are you're long this particular instrument?
Yeah, I have a small position of XXP, yeah.
But at what price?
At what price? I gotta take a look at it. Probably about
lower
$5 down. Probably about $4 or $5 down. Yeah.
Oh, okay. I'm going to suggest you've got to be prepared to that it could pull back a little bit here as China has a little bit of a bounce. So you might want to take something off. But if it holds above 77.35 to 77.02 is the 9-period moving average support. 75.74 is very strong support. So I would take a little bit off, and I'd probably put that back at about 77.50 to 76.30 if it comes down there.
Where would you put a stop for this thing?
I would put a stop. Because the weekly is still strong, I would like to hold it all the way to leg D. But I would not mess around. Some part of my position, I would put a stop. If you don't get a little bit out now, I would put a stop on some part of my position at 77.90. Not the whole thing, just a part of my position. I would get out of this if it broke under 75.60.
Or below 75.50?
Yeah, that's not good.
Below, okay.
Right now it's holding well. I think you've got a nice position, but be prepared that it could pull back a little bit from here into maybe early next week. Hey, nice trade, Kim. Congratulations.
Well, I've been following Tom O'Brien. He's saying about the Shanghai index and the Hong Kong index. Right?
Yes.
He thinks he's going for the 08 low on the Shanghai index, yeah.
Yeah, I can see. Well, that's China's almost the same thing with that M formation going down to the bottom. That's why I'm saying keep your core position. If you want to take a little bit off, you can take something off, but keep a core position.
I'll just put the stop about 77.90 range, and
okay.
I can stop that. We'll make a little money out of that. Okay.
Okay, very good. Congratulations, folks. I'll be back for Larry's show straight after this. Thank you for calling, Kim. I appreciate it. I'll be back in a few minutes to do Larry's show, the Futures Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.